2021, the way that most people communicate is through social media. And one of the biggest social media companies out there is that of Facebook Incorporated. Facebook develops products that enables people to connect and share with friends, family through mobile devices, personal computers, virtual reality headsets, and in-home devices worldwide. The company's products include Facebook that enables people to connect, share, and discover and communicate with each other on mobile devices and personal computers. Instagram, a community for sharing photos, videos, private messages, Messenger, a messaging application for people to connect with friends, family, groups, and businesses across platforms and devices, and WhatsApp, a messaging platform that is used by people and businesses to communicate in a private way. Howdy everybody, and welcome to a series that I actually want to start where I am going to analyze the FANG companies. And starting off, we're going to start with the F of that FANG, and that is, well, as you saw, Facebook. At $330 a share, is this company worth what the fundamentals are showing? We're going to find out in this episode. Starting off, we are here at the calculator. As always, I have inputted everything that I need in here, and all of that can be found in Seeking Alpha. So if y'all want to make sure that these numbers are correct, you can go to Seeking Alpha and find them for yourselves. Starting off, Facebook, PE of 24.47, so this is already expensive. Market cap of $930.5 billion, not paying a dividend, so you know all of that cash flow is going off to paying off that debt. Coming over here to the exact calculator, okay, the growth assumption. Facebook is a pretty big company. Now, Seeking Alpha has the revenue growth rate year over year of 39.43. The fact that this company is that big, and knowing that there are a lot of competitors that can easily just spring up, I do not believe that they'll be able to continue this 39.43 growth rate year over year. So I am actually going to bring it down to 25%. Next, looking at income, we got 10 billion to 29 billion. That is an increasing, which is exactly what we want to see. Next, figuring out the free cash flow, we got 11.6 billion to 23.6 billion, averaging at 17.86 billion dollars in free cash flow in the past 5 years, which is really good. They have a ton of money in hand. Next, revenue. Revenue, we want this, of course, to be increasing. We got 27.6 billion to almost 86 billion, which is absolutely incredible. That's really, really good to see. Next, total debt. Total debt, obviously, we want this to be decreasing. However, not necessarily if we have a positive free cash flow, a positive net income, and a positive revenue. So as you can see right here, Facebook in 2016 and 2017, it had zero debt. Recently, though, it has gone up to $12.5 billion. It's an increase, but again, peanuts compared to the amount of income and revenue and cash flow that they have. Next, we got the shares outstanding. Obviously, we want this to be decreasing because the more shares that they are buying back, the more pieces of the pie they are giving back to their investors. 2.886 billion to 2.826 billion, which they are buying back at a rate of 2.12%. which is really, really interesting to see. However, with the amount of revenue that they're making and not paying a dividend, I don't know why they don't do more share buybacks. And lastly, taking a look at cash and equivalents, we see that currently they have $16 billion in cash on hand. And with all of those metrics, we see that the target share price is $374.97. Obviously, that is not taking into account debt, and taking into account debt, it just goes up by a mere $2 to $376.74. With a margin of safety of 5, 10, and 15%, we would like to buy this at $357.90, $339.07, and $320.23. At the current price of $330, we see that we are between the 10% and the 15%. So if anybody's interested in Facebook for a growth play because they do not pay a dividend, at the current price of $330, by these metrics, we see that this company is undervalued. All right, so that pretty much does it for this episode. Like if you like, comment, subscribe. It really does help here with the algorithm on YouTube. And if you would like to follow me on my new tech sites of BitChute, Odyssey, and Rumble, where these videos are also going to come out. And in addition, you will also find exclusive crypto content only on those new tech sites, and I'm also planning to make exclusive stock market analysis on those new tech sites as well. And when it comes to Rumble, I also have a Let's Play channel where if you would like to see me play video games, then you can follow me. All of that link in the description. With that said, peace out everybody, and be on the lookout for the next stock analysis episode.